So hi everyone, my name is Seema Alexander. I'm coming to you live on day 2 of DC Startup Week from WeWork down in downtown Washington, DC. I'm the founder and chief strategy officer of Disruptive.ceo, a strategic advisory firm focused on supporting visionary founders and companies to scale and grow. And I've had the honor and privilege to curate the growth track for this year's DC Startup Week. We've had about 16 panels curated for the week specific to growth. So from branding, marketing, sales, funding strategies like the one you're about to hear on crowdfunding, VC strategies, angel, we'll go on and on. So if you have not had an opportunity to attend others, please go to Attendify and look at the growth track if you're at the growth stage mode. We also have a couple other amazing tracks. We have the founder track, developer track, creative economy track, and cultural track. Many of them very relevant to what's going on post-COVID. So I would advise you to take a look and see what is most relevant in your specific startup. So in this next session, we have an amazing topic, crowdfunding and the different models, specifically alternative models for raising capital. We're excited to bring Prayas Neupane, who leads Washington, D.C.'s economic partnerships efforts on business attraction and retention efforts in the district. And he is our moderator. And Prayas, I'm so sorry if I did say your last name wrong. Please do say that accurately when you get a second when I introduce everybody else. So what's exciting is this is a very diverse group of panelists. We have legal folks, strategy folks, people with development backgrounds. We have a lot of wealth of knowledge on different types of crowdfunding, what works, what doesn't, and specific examples that they're going to share. So with that, Prayas, I'm going to hand it off to you.
Thank you, Seema, and no worries about the name. I feel like it's such a difficult name. I'm used to different iterations of that at this point. But thank you again. Good afternoon, everyone. I will be serving as a moderator for the day. As Seema mentioned, my name is Prayas Neupane, and I support business retention and expansion activities for the Washington, D.C. Economic Partnership. For those of you that are not familiar with the work that we do at District, the Washington, D.C. Economic Partnership's mission is to promote business opportunities throughout the district and to contribute to business retention and attraction efforts. We have been partnering with DC Startup Week for a number of years now. We sponsored the event last year, and we're really excited to be partnering this year as well on this particular topic. Crowdfunding is an exciting topic, right? Any alternative capital is exciting to talk about because that is such a need that we're seeing in not only DC's ecosystem, but the entrepreneurial ecosystem throughout the country. The district government, along with some of our partners, have focused on crowdfunding over the course of last week or so, which I'm sure Kate is going to talk about later in her presentation. So I'm excited to serve as your moderator for this particular event. So we have a pretty robust group of people here who have diverse set of expertise and knowledge, not only focused on crowdfunding, but also just thinking about how do you create strategies to raise capital, but also also thinking about other ways of raising capital. So for today's session, you can expect to hear from our panelists about different ways companies can raise capital, legalities of crowdfunding, preparing funding strategy for your business, as well as thinking about how do you build an ecosystem for alternative mode of capital, such as crowdfunding. So with that, let's get right to it. I am going to be turning it over to our panelists. We have 4 seasoned panelists for today. So for the panelists, when I call your name, if you could just let us know who you are and why you are excited about crowdfunding, and we'll go around, introduce all of us, and then we'll dive right into the topic. Let me get started with Larry. Larry, you are a partner at Shulman and Rogers, so turning it over to you.
Yep. Thanks, Prayas. As Prayas mentioned, a partner in the next law group at Shulman Rogers, working extensively with startups. We're excited again this year to be partnering with DC Startup Week. I've been working with early stage companies from their initial funding through exits, M&A and IPO exits, and everything in between. Very, very excited to be here talking about crowdfunding, which is sort of the relative newcomer on the capital raising alternatives. Excited about my panelists and to be working with and talking with Paul, who's at a different firm, but we partner with him on crowdfunding. So it's exciting to be here with everybody.
All right, thank you, Larry. So you segue to Paul. Paul, tell us a little bit about yourself and why you're excited about crowdfunding.
Thanks, Prayas. Well, I have a website called thecrowdfundinglawyers.com, so that should tell you how invested I am into this stuff. You mentioned some of the things in your introduction that I think are really important, that the geographic and demographic opportunities for crowdfunding are really things that are just now started to emerge, where the sort of quote unquote good old boy network of venture capitalists in San Francisco, New York, and Boston, and a couple of other places have been the main places where companies have had to go, and this really diversifies and democratizes capital investment and gives everyone a much more equal chance to put their idea out there and become the next the next Steve Jobs or the next Google or what have you. So I'm very excited to be here. I appreciate the DC Startup Week for having me, and Lisa Freelander at Shulman Rogers for suggesting this panel. And I'm excited to discuss this, and hopefully the audience will have some questions, and we can have a really productive conversation.
Thank you, Paul. And you bring up a really exciting point about you as a resident or whatever you are, being able to be part of the success of the companies that are located in your region. So you essentially can shape how your community can really look like because of crowdfunding. So certainly an exciting tool. Let's go to Sarah. Sarah, up to you.
Yeah, hey Prayas, thank you so much. It's really exciting to be here. I'm the co-founder and CEO of 20 Degrees, and our company was founded to helping people into the ecosystem. What we realized is that a lot of people and ideas just didn't have the chance to even see the light of day because the funding system just didn't see them. And crowdfunding is just one of those tools that allows people to be seen and access. And that's what really excites me. This is just one of many tools, and we are not lawyers. We don't even play one on TV. We come from the business lens of like, what are the things that have to be in place, and what's the knowledge that founders and companies need to have up front so they can increase the odds of being successful. I think while venture and debt and all those things, they certainly have their place, there's a lot of other ways to get ideas to see the light of day. And we're just block and tackle practical, even for the emerging forms. So I'm really excited to learn from my co-panelists and also contribute.
Thank you, Sarah. And the interesting thing about crowdfunding is I feel like, if you ask someone, hey, have you heard about crowdfunding? People will say yes, right? Because I feel like that's a general understanding that it's not new. But if you look at the usage rate among businesses, it's not a lot. Not many businesses have utilized that. And that's certainly true for Washington, D.C. as well. So Kate, do you want to tell us a little bit about who you are and why you're interested in crowdfunding?
Yeah, thank you so much. Thank you to Prayas, to everyone who has joined us here today, to our co-panelists, and we're really excited about DC Startup Week too, and seeing how that has grown. And it's really a testament to the strength of how many startups there are here in the district, and how many small businesses, and how much people want to connect, and how much people want to support them. My name is Kate Mereand. I'm a program manager for the DC City Government at the Department of Small and Local Business Development. And within that, I run the Innovation and Equitable Development team, and our team runs pilot programs, grant programs, trainings, and other initiatives aimed at removing barriers to entrepreneurship and building the entrepreneurial ecosystem. And that's a lot of what I will talk about in my portion later today. We're definitely excited about the possibility for capital for businesses, because every business needs capital, and that is always a challenge and a struggle. But we also see the incredible crowd building, networking, marketing support that could potentially come from crowdfunding, and we can see that as being a strong benefit for all businesses, whether or not they actually reach their capital raise. And so we really want to explore what that could look like and what it means for the community to invest in local DC-based businesses, both buying from them, but also investing in other ways.
Thank you, Kate. And we certainly appreciate all the work that the DC government is doing to support crowdfunding in the district. And I'm sure Kate will talk about this later on, but we are partnering on a crowdfunding stakeholder group just to think a little bit more about how do you support the ecosystem. So with that, we've heard a lot about the business lens, right? Like how do you support businesses? So just thinking about our panel today, we have we have Sarah who's going to talk through a business lens. We have someone who's going to talk about, we have Paul, I believe, who's going to talk about the legalities of crowdfunding, and Larry, you're going to talk about raising capital. So folks, if you have questions, put that on the chat window. We'll get to that at the end. I'll try to hold on to some of these questions right now so that we can tackle it at the very end. But if it's some of the clarifying questions, we'll get to that in the middle as well. So let's jump to the meat of the webinar. So let me start with Paul. Paul, you.
Why don't I start? This is Larry. I'm going to set the table for Paul. That's okay.
Good, Larry. So why don't we start with you? You've worked with a lot of businesses, a lot of early founders. Tell us a little bit about different ways companies can raise capital and shed some light on the 506C rule that is often talked about.
Yeah, that's terrific. And I think it's, Paul mentions, the way things have been done. And I think I'm not going to spend too much time on that, but I think it's important when you say that crowdfunding is an alternative to what? And just sort of by way of history, the federal securities laws, which govern the sale of securities, go back to the Great Depression and the 1930s. And that's when they adopted the federal securities law, and they took a very parochial view of investment at that point in time. They said, everybody's poor now, everybody got ripped off, so we're going to make only investments available, private placements, investments available only for the very wealthy and very sophisticated investors. And that's more or less how things proceeded for close to 100 years, right? I mean, we're almost 100 years past the enactment of the federal securities laws in 1933. And at the heart of the federal securities laws, it says that every sale of securities must be either registered, that's an IPO. People are in our audience today probably are not doing IPOs, must be exempt, and that's what we're going to be talking about, exemptions, or illegal, meaning you go to jail. So and to put it again and setting the table for Paul and putting everything in perspective, last year the capital markets, the public capital markets, accounted for about $1.5 trillion of capital raised. The private capital markets are probably easily twice as big, $3 trillion of capital raised. And part of that is fewer companies going public, and part of that is it's just a more attractive and sometimes quicker way to raise capital. And so coming out of the Great Depression, for almost 100 years, almost all of the private capital that was raised was done through what's called private placements. And the bulk of private placements were under Regulation D. And Regulation D, Rule 506, was the main vehicle for that. And it says you can only, if you're doing a private placement under Regulation D, you're going to sell only to accredited investors. That's people with incomes of $200,000 or $300,000 with a spouse, or net worth of $1 million.
Larry, with us? No, go ahead.
Yes. Can you hear me?
Go ahead. Yeah.
Okay. Or vehicles with $5 million of assets. So again, a fairly high threshold. Selling securities, it could be stock, it could be preferred stock, it could be your convertible note or your safe, all of those instruments, but channeled to accredited investors, done with very limited disclosure and no ongoing disclosure obligations. The flip side is for companies raising capital that way, they are not allowed to advertise. You can't go on the radio, you can't stand on the street corner with a megaphone, you can't put an advertisement in the Wall Street Journal or the Washington Post. You are allowed to bring in, I said this for accredited investors, you are allowed to bring in a very small number of unaccredited investors. But if you do that, the obligations go up and the offering becomes more difficult and more expensive to effect. So fast forward, Congress is looking at that. It's looking at this 80-year history, and it's looking at another boom and bust cycle in the public markets. And in 2012, they adopt the Jobs Act. And coming out of the Jobs Act, there's several important aspects for companies that are raising capital and people that are involved in the capital raising process for them, whether it's investment banks or lawyers like me and Paul or other people in the capital raising ecosystem. One of the important changes that came out of the Jobs Act were in 2012 were rules that the SEC adopted in 2013, and that was they said, okay, you can do your private placements to accredited investors, and now we're going to let you advertise those private placements. And as part of and the quid pro quo said, in exchange for allowing you to advertise your private placements, you're going to have to do a little bit more work. It's still only to accredited investors, but you're going to have to do a little bit more work to make sure your investors are accredited. And that's called the verification process. Under the old rules, which still exist, if you're not doing an advertised offering, people can self-certify. They can say, yes, I'm accredited. My name is Warren Buffett. My name is Paul Jossey. Whatever it is, you say, you're certifying to the company that you've got a certain amount of income or a certain amount of net worth. And as long as the company doesn't think you're lying, that's how that investment proceeds. With the advertised offerings under 506C, the company's got to do a little more work. They have to look at a person's tax returns, or they have to look at their financial statements or get some information from their brokerage account for how much they've got, investable capital they've got. And there's sprouted up a cottage industry of verification services that have platforms, and for a relatively low fee will handle that process for companies. It's very interesting. And again, it's a way that the SEC said, we want to open up the private markets a little bit more, also coming out of the Jobs Act. And this is where I'm going to turn it over to Paul, and having seen sort of the very tight parameters of capital raising to accredited investors without advertising, or with advertising, but a little bit more legwork. I should mention, as part of Reg D, when you do your 506 offering, there's no limit on how much capital you can raise. You can do a $1 million round. You can do a $100 million round. And I've been involved in all of those, more $1 million rounds than $100 million rounds, but they all exist as private placements. Also coming out of the Jobs Act, Congress said, SEC, go figure out a set of rules to allow for crowdfunding. And I'm going to turn it over to Paul to talk about the rules that relate to crowdfunding and what crowdfunding is when we securities lawyers talk about crowdfunding, as opposed to like a you funded or a we funded, some sort of crowdfunding website that's not really for securities, but for companies that are looking to, give investors, the prototype of their product in exchange for investing up front. Well, why don't I with that, Prayas, I'll turn it over to you or Paul.
Yeah, Larry, just a clarifying comment for everyone. So when we're talking about crowdfunding right now, we're mostly talking about equity crowdfunding, right? Because there are other different forms of crowdfunding. There could be grants, there could be loans. But what I think, Paul, you're specifically going to talk about is equity crowdfunding. Is that correct?
That's right. I'm going to talk about essentially regulation crowdfunding, which was Title III of the Jobs Act. And this is a specific type of crowdfunding that the audience is probably familiar with, as Larry mentioned, other kinds of crowdfunding like donations and pre-ordering products. This is a higher level, more professionalized, if you will, type of crowdfunding. So I want to thank Larry for including me in the same sentence with Warren Buffett. I don't think that's ever happened before. But so when I say Reg CF, That's what I'm talking about, is the securities investment level crowdfunding. So before I get into the legalities, real quick, I want to give you some numbers just to show you how quickly this has evolved and how quickly it's taken off. Reg CF, even though Larry talked about the Jobs Act of 2012, Reg CF only went into effect in 2016. So from May of 2016 through the end of 2019, 263 million was raised through Reg CF campaigns, putting in about $1 billion into local economies. From 2018 to 2019, there was a 37% growth in Reg CF investments and Reg CF campaigns. July 2020 was the biggest month ever for Reg CF at 23.2 million. And two of the biggest portals, we're going to talk about portals in a second, but two of the biggest ones, Seed Invest and WeFunder, have also reported their biggest months ever this year. And there's obviously a lot of reasons for that. The awareness is growing, but also because of the global pandemic, people are migrating more things online, and investing in companies, I think, is one of them. So if for those audience members out there that are thinking about doing a Reg CF securities investment crowdfunding campaign, what do you need to know? I don't have a lot of time, so this is a really quick overview. But right now, companies can raise up to 1.07 million over a 12-month aggregate period. So if they have a successful raise, but it's less than that, say it's half that, they can do another one within that 12-month period, as long as you don't go over the aggregate limit. You will file what is called a Form C, which is the legal document with the Securities and Exchange Commission. This will have all kinds of disclosures about the company, about the risks, about the industry. It will also have financial information that's done separately by a CPA, and it will have the subscription agreement, which is the actual contract that investors will sign to actually purchase the securities. So where are these securities purchased? They are purchased on marketplaces called portals. There's currently about 51 portals nationwide. There's been a spike in applications for them over the past 6 months in particular, but there's about 5 of them that really matter. They're really big ones. Most of those are in California. There's some regional ones that are starting to gain momentum, particularly in the upper Midwest. But these portals have the equivalent of gold for a startup or a small business that can get into them, which is huge investor lists that can be up to into the hundreds of thousands of people that these portals have accumulated over the course of their existence through other successful raises. So, but it's not only investors that are on these lists. There are press people that are on these lists. There are trade people that are on these lists. So it really offers a really outstanding opportunity to get exposure for your business and your product. On the other hand, these big portals that I'm talking about really know what they have here. And so there are a lot of people that are trying to get in them. So if you are a company that would say, hey, I would like to be in WeFunder, or I would like to be in Seed Invest, you really have to think about what you're bringing to the table that is going to make you unique, that is going to make you stand out, and enable you to ring their bells. And we can talk about some of the ways that you can do that in the question and answers if there's any questions about that. You will set a minimum and a maximum. Like I said, your maximum is 1.07 million, but you can do it less than that, and lots of companies do. Your minimum I've seen is low on the smaller portals is 10,000. The bigger portals want you to do more than that, say somewhere around 50,000. So you've got there's a wide range there. If you don't hit your minimum, you don't have anything. So you want to really make sure you have your minimum secured before you go into one of these raises, because it is no fun not knowing if you're going to hit your minimum or not. After a successful raise, because we all know you're going to have a successful raise, you will have annual reports. You'll have to do at least one, as many as 3, for a raise. And if you do another raise, then it starts over again. And these raises will be essentially an update by your company, an update on your finances, and an update on your progress. And like I said, you have to do usually 3 of them, but depending on how many investors you had, there are ways to stop it at 1 if you're not planning on doing more raises afterwards. The individuals also have investor lists. One of the most important things about this, Larry mentioned the accredited investors that don't have limits when they're doing the Reg Ds and the venture capitalists and the things that Larry has worked with Reg D. Well, in Reg CF, as it is now, even accredited investors are subject to individual investor limits, and it's this really funky, confusing formula that the Congress came up with, and the SEC, quite frankly, made worse. But it's a graded scale with annual income and net worth. Your minimum maximum is going to be about $2,200 for the investor, up to about $110,000 as it stands right now. We'll talk about some future fixes in a second, but that's essentially the range for the investor, and the portals will help the investor when they sign up and when they decide to invest in your company. Talk about costs. The SEC came out with a report in 2019 pegging the costs at about $24,000 for a successful raise. I think that's a little high. I've been in some other ones that were successful that the companies didn't spend nearly that much. But the thing that I want the audience to know is this is a process. It's hard work. There's a lot of preparation to do it. You should, and this is all of your team is going to be involved in this. And so just like any kind of campaign, a lot of this is won or lost in the preparation. So this is not about throwing up something on a website and expecting people to throw money at you, because that is just not how this works, and it's not how successful raises happen. But if you do the hard work, there's a nice big pile of happy at the end. So future fixes, I want to talk about for a second. As much as I talked about how successful this has been, there's a lot of ways that it can be more successful, and the SEC has finally recognized this. For whatever it's worth, the SEC was very hostile to regulation crowdfunding at the beginning. They've gotten a little less hostile now, and they included the Reg CF private exemption in their overall review of the private exemptions that they started last year and had proposals that came out in March. So for Reg CF, the important ones are raising that 1.07 million limit to 5 million. And by the way, I should say these are just proposals at this point. They are going to be voted on probably sometime this year by the commissioners or sometime in Q1 of next year. Raising that 1.07 million limit to 5 million, finally taking away that cap for accredited investors to allow them to invest as much as they want, just like they can in Reg D or Reg A+. Allowing testing the waters. This is very important. Right now, you can't really publicize your raise. You can't promote it. You can't do anything until all the paperwork is filed and all of the, so you really don't know how successful your raise is going to be beforehand. But enabled by testing the waters, you can really find out either how much of a crowd you can really bring to this and how much momentum you can start out with, or if you shouldn't do it at all because there's not a lot of interest in it. So that's a really important fix. And finally, special purpose vehicles are a way to get the independent, the individual investors all into one bucket and make a nice clean line on your capitalization table. Larger investors like Larry deals with don't like this. They don't like all of the individual investors on the capitalization table. There are some questions about how this SPV is going to work. Like I said, it's not live yet, but right now it is a potential fix to make this one more step to make it smoother. And so that's it. I will say the future for this is very bright, and I'm happy to answer any questions anyone might have about it.
Thank you, Paul, for the insightful comments. Just before we move on to Sarah, just a quick question on the portals. One of our participants wanted to know if there's a centralized place where they could find all the portals that offer this.
Yes, all the portals are on the FINRA's reg site, FINRA. That's the Financial Industry Regulatory Authority. You can, they have them all listed. You can also go to Crowdfund Capital Advisors, and I believe you can also go to Start Engine, and they will have data on the size of these, so you can see which ones are the big ones and which ones are the small ones.
Excellent. Thank you. I'm going to back us up just a bit because I think when we're talking about capital, sometimes it's easy to get ahead of why do we need the money. So we always start with why do you need the money? And to remind ourselves, if you are just trying to keep your business afloat, you really need revenue. And if you need revenue, go get more customers, or you need to be looking at bootstrapping or self-funding. The things that we're talking about right now, this is for starting something new. This is growth. This is a different ball game, and it does come with bigger strings and bigger things. So just naming that up front. So, and it's not a silver bullet. I think it's just, and also if this is one of those things where you just can't wait to get done with fundraising so you can get on the real work, that's also something that you're never done thinking about money. So assuming you figured out that you need capital, not revenue, you also then need to make sure that you prove that people want what you have and that you're selling. So that's where we're at now. So we actually put together a checklist to preparation. Paul, I really appreciate you saying it really, this is won or lost before you've talked to a single investor and all your paperwork is done. So I love checklists. They make me feel safe. So business essentials. Do you have a business plan, which we actually made as a business model canvas? Do you have a revenue model that you can explain? Do you have basic financials that someone would look at and think makes sense? Do you know if you need equity or debt or grants? If it's equity, do you know how much of your company that you're going to give up? Are you okay with that? If you are going to go for debt, do you have a plan that makes sense with your financials about paying it back? If it's about grants, do you have a plan for reporting? You know, those things that Paul was talking about, those annual reports, do you know what that might look like? Think about that ahead of time. 2, traction. Do you have proof that people want what you are going to sell or are selling? Goal. How much money do you really need? And especially the point that if you don't hit your goal, you don't get it. Not for all of them, as I certainly see, but for the most part, this is horseshoes and hand grenade stuff. So close doesn't count here. You've got to hit it or beat it. Platform. Do you know what platform you want and why? Is Kiva, WeFunder, have you tested it out? Have you registered? Do you know how hard it's going to be to work? Do you know who's hanging out in the platform? Why? Are these the people you want as part of your company? Is this the crowd you want to be with? Advisors. Do you have at least one, better 2, maybe a crowd, that people who are not on your team, paying, who you can call at least once a week for advice? Don't do this alone. Marketing. This is where these things are won and lost. Do you have a marketing plan that is written out that talks about social? Do you have a good video, website, blog? Do you have amplifiers teed up? Do you have a plan for finishing? What are you going to do with, do you have a red zone plan, to borrow a little football season analogy? Do you have $500 to $10,000 for marketing? Or one data point, if you need $10,000 for every $100,000 that you want to raise. Do you have a plan for success? What are the first 3 things you're going to do after you hit your goal? Because you're not done, you just started. Now what? What are the first 3 things you do on day 0? Do you have a plan for failure? What are the first 3 things you're going to do if you don't hit your mark? What are you going to do if your IP is stolen? This is a possibility that is unique to this. Compliance. Legal. Do you have access to legal counsel that you can afford? Accounting. Do you have access to accounting? And this is not bookkeeping. This is CPA level help that you can afford. And I would say resources that I'd point you to: Beacon, university clinics, pro bono. This stuff, I mean, this is thousands of dollars before you even are out of the gates. And I would end with number 10 is community of practice. I think as entrepreneurs, we forget and we try and do this alone, and that's why all of this can sometimes be even harder than it needs to be. I'd leave us with 3 points here. Have you talked to at least 2 people who've been successful in this, and maybe 1 who hasn't? Learn from them. 2, do you have 10 friends of friends of friends of friends? Because that's your crowd. It's not the people you have dinner with. It's not even the people they have dinner with. This is an outer ring. You have to show up with people, but it's the people's according to data who are most likely to help you. Have you done the concentric circles? And finally, do you have people who will help you stay whole, who don't give a darn about what you're building, who value you regardless of what you are doing? Because this is hard. We know it. We're in it. So people who can shore you up when you are in this raise and the next raise and the next in the business and on the business. So keep looking. The world needs what you are building. We all do. And getting it to, this is just getting you to the finish line. But as we all know, there's a lot of, or to the starting line, not the finish line. So that's what I have to offer.
Thank you, Sarah. And my apologies, folks, for my unstable internet connection. It keeps on telling me to shut up my video so that I can speak. All right. I know there was a lot in what Sarah said. I think that could be a whole session of its own, because I think that information is extremely helpful. So we'll try to dig a little bit deeper later on during Q&A. But I do want to turn to Kate. Kate, can you talk a little bit about why the district government has decided to focus on crowdfunding, and what does the crowdfunding ecosystem really look like in DC right now?
Yeah, and thank you, Prayas, and thank you to all of our other speakers. You know, I think hearing what everyone's talking about, when you first start to learn about crowdfunding and go a little deeper, it's like looking at a big maze and not knowing which direction you're supposed to go or even where you're supposed to start. And I think that is part of the reason that from DSLBD and from my team, that we are so interested in thinking about how to support the crowdfunding ecosystem. So I'll first say a little bit about ecosystems, and then I'll say more about crowdfunding. And so as we think about an entrepreneurial ecosystem, some people might have heard that, you know, phrase 10 times earlier today. Other people, it might be the first time that you've heard someone say an entrepreneurial ecosystem. When we start thinking about having a thriving community of businesses of all sizes that are locally owned, it means that there are a lot of businesses and there are a lot of resources available to them. And that also becomes important if you want to see high growth startups as well. A lot of times when people talk about startups, they talk about high growth, but it becomes important to understand that the ecosystem needs to support businesses of all sizes, businesses that are doing all sorts of different things if you want to get to a really strong local economy. And we have always looked at sort of different ways to support that, but this spring, we started to recognize that we're in a space where small businesses, startups, and others are facing unprecedented challenges, at least in our lifetimes. And also recognizing that Washington, DC as a jurisdiction is a space that has a lot of potential for the community to support these small businesses. And there are a lot of different ways that can happen. And so we've always had a presumption that there's probably a lot of untapped investment potential within the District of Columbia. And now we really see the time that like small businesses are in need of that support, whether that's Main Street businesses, your tech startups, your service-based businesses, everyone is in need of that support in different ways. And so one of the things that I'm going to drop into the chat is a session that our director ran in July. It's a 1 hour sort of primer on crowdfunding with some national and international experts, and it will walk you through the different types of crowdfunding. So, perhaps, if you want to understand a little bit about GoFundMe and the donation space, there's some challenges for small businesses if they try to go that direction, mainly that you can't reconnect with the people who were there, and you're going to have to think about how that money gets treated on your balance sheet. To rewards, which might be for a lot of people, rewards would be sort of your Kickstarter model, or someone is purchasing something directly from you. That might actually be for a lot of people a good sweet spot to get started and to really start to learn a little bit about crowdfunding. On into debt, which we heard a little bit about in sort of the Kiva models and others. And so looking to take a loan, but to have that loan be coming from different spaces than necessarily just a bank, up into equity crowdfunding, which is an entree, as you've been hearing the other speakers talk about, into sort of building equity within your business. And I think one of the things that we've long seen sort of in the small business ecosystem is there's often been this huge divide between debt and equity. And some people will go for debt and they'll stay in debt, and some people will go in equity and they'll stay in equity. But crowdfunding gives us a space where we can support people learning across that spectrum and thinking about different options that might be available to them. And so as we think about that importance, I want to highlight that this is a learning journey for myself and for my team and for our partners. And so one of the things that Prayas highlighted earlier is that he and I are partnering to lead a crowdfunding stakeholders group. And so I'll talk a little bit about what stakeholders are. Stakeholders are people who care about a topic, want to come together, want to network, and want to help push an agenda on something. And so for the last 3 months, we've been convening individuals who are interested in being stakeholders on building the crowdfunding ecosystem. We're all learning together, and we're trying to find more folks who are interested in that so that we can help ecosystem map and then assess where are the spaces in the ecosystem that need more support. Do we need more training? Do we need more networking events? What are the things that would help people see that? Do we need advertising and promotion campaigns so that sort of local potential investors can see all of the wonderful different ways they can invest in DC-based businesses? And so I'll put the link in again in a moment, but we have another one of those sessions coming up later this week. It'll be Thursday at 1 if you'd like to join. And we'll be launching a pretty simple survey, just asking people, are they in the ecosystem? How are they in the ecosystem? And do they want to participate in this effort to really bring together businesses and service providers and potentially even investors who care about building DC-based businesses and helping them during this time in a lot of different ways. I'm going to end with one last point, which was sort of my first point that I mentioned at the top, which one of the things that I think I have learned about crowdfunding, but I would always defer to the experts on this, is it really is about crowd building. And the potential of building a crowd, everything that Sara talked about needing to build revenue and having people who support you, building that crowd is such a valuable exercise for your business. And so as you think about what does it mean to pursue crowdfunding, one of your goals is going to be to capital. Another one of your goals may be just getting everything organized. Anytime you're going for capital, it's hard. Whether you're going for debt, whether you're going to ask, your grandmother if she will invest into your business, it's always hard. And you have to prove a case of like why this is going to work. And so it can also be seen as sort of a test case. Do I have all my pieces together so that I'm ready to run for capital? Because a lot of times when people are searching for capital, the first strategy that you use may not work, but that doesn't mean that everything you did was bad. It means that you might need to tweak and adjust and try another strategy. And so the benefit of crowdfunding is it gives you an opportunity to meet and network and try to connect with people you've never met before, and you have a very obvious reason for why you're doing it. And it helps people learn that your business is out there, that they might be able to come buy something from your business or partner with your business. And so we are, again, very early in this effort, but we think that's important. And we think that Washington, DC is a space that is ripe for potential to support our DC-based businesses. And so I just want to say thank you to everybody.
Thanks, Kate, for providing that overview of not only crowdfunding, but what's happening in DC. So there's a question on the chat window that I want to address at this point. And this might be directed more towards you, Sara, but feel free to chime in, everyone. As a business owner and entrepreneur, how do I know that I'm ready for crowdfunding, and how do I know what is the right form of crowdfunding for me to go towards?
I would certainly invite my lawyer colleagues as well to on that piece. Make a list, start. And to Kate's point is make a plan, make a list, and try. You have to start. I would caution that, you know, the equity piece does carry more significant penalties is the wrong word, but you have to you have to be a bit more careful. There are bigger things if you're not compliance matters a lot in all of it, but particularly with the securities aspect. But do your research. There's a lot of great information. Become part of the stakeholders group that Kate and Prayas are doing, and be part of the community. What I've learned and what our company has learned alongside people is this stuff can feel really intimidating in the beginning. So you just assume it's not for me. What we're here to say is you won't know if it is or isn't for you unless you try. That's been this whole problem with capital, right? So get in there, assume it may very well be for you, read, learn, ask other people, and until you hear a no, assume it is for you. And every little question that you ask, go for an answer and keep going. So that's a generic answer, but make a list, have a plan. How did you know your product was good? You just kept asking people.
And this is Larry. I'll jump in and certainly welcome Paul's thoughts. Also, I mean, one question that, you know, we often come across is what sort of companies are best for a crowdfunding raise. And I think, you know, you can drill down, but at a 30,000 40,000 foot level, it's companies, number one, probably companies that have a retail product, a consumer retail product, and that are looking to build a relationship with consumers. So there's a little more sort of bang for the buck. You're advertising your product, you're advertising your securities. Maybe you're in a sexy capital, a sexy business line. Paul and I worked on one recently for somebody that's in consumer solar. Again, that's something that somebody's going to look at and understand, as opposed to somebody that's, you know, making a widget that goes into a machine that, you know, that makes some piece of high-end equipment. You know, consumers may not understand that. It's going to take more explaining, probably a little bit more of a barrier. You know, and then the other exception, or the other side of that, is if you have a product that it might not be necessarily a consumer product, but it might be quite literally a sexy product. I have a client whose product is in the plastic surgery space, and, you know, their advertising involves, let's say, medical nudity. So it's eye catching, and so it's something. And they had a fairly successful raise, and the platforms really wanted them because, you know, their imagery is something that will pull people in.
Paul, any thoughts on that?
Yeah, I would just say, you know, if you're in maybe the prototype stage, or you have some product, but you don't think you're ready for, you know, all of these rules that I was talking about, you might want to think about doing a Kickstarter first, right? And that can build you a crowd, that can give you momentum. That's something that you can take to a portal later on and say, look, we have had a successful Kickstarter campaign. We had this many backers. Now these people are probably going to want equity, and so you can take it on a rising slope, a continuum where you don't have to just pick one or the other, and you can keep building your crowd through the different models.
Well, just to piggyback on that, what would you say is a starting point if I do want to go through the securities crowdfunding component? As a business, what do I need to do first? Do I need to work on my financials? Do I talk to my legal team? How do I get started?
First of all, do you have an operating history, right? How long have you been in business? If you're at the idea stage, it's going to be really hard to get you into one of these bigger portals to get you the exposure. Do you have some backers here that can write fairly substantial checks? So if you've got a couple of years under your belt, You've got maybe some of those accredited investors that Larry talked about, willing to back you and willing to throw their money in with the retail little guys. Then you're starting to build something that's going to be really attractive to the portals. But you are not going to, in most circumstances, at least the big ones where you get the most benefit, you're going to have to be a little bit past that idea stage, and have a year or two under the average. The average company is about 2.5 years that goes into a Rec CF. But you're going to have a little under your belt to present to these portals to make them attractive, to make you attractive to them.
And have you, this might be for you, Larry, have you seen any mistakes that you have seen entrepreneurs make while they are going for this?
Well, yes, and I think I'll sort of key off something that Paul said around costs, and I think there has been now sort of a fairly established group of portals that have a fairly established group or set of cost parameters. Early in the stage, just like anything in the finance area that opens up and is new, you get a little bit of a wild west. And I think entrepreneurs in general need to be wary of people that are not the lawyers, but people that are coming in to help them raise capital. And like I said, I mean, because the fundraising platforms are actually regulated by FINRA, I think that area has calmed down and is probably a little less wild than some other areas, and operators that people that are raising capital will come across, in terms of what is it going to cost you, in terms of, you're going to take 10% of the raise, 10% of your company. I'm going to take a warrant going forward. All of the crazy things I've seen, people come to me and say, so-and-so is going to help me raise capital. Probably a little less of that at this point in the crowdfunding area than in other areas. But I think people need to be, have their eyes open for the ask from who's ever on the other side of a capital raising transaction, whether that's a broker, a finder, excuse me, or their funding portal.
Thanks, Larry. I do want to go to the chat window one more time. There's a question about, so I'm just going to read the question for all the panelists. I've seen most of the crowdfunding focus on products. How can you do crowdfunding for tech startups with service but no products? So Paul, Larry, Sarah, and Kate, just based on my understanding, you can pretty much do crowdfunding for any kind of business, whether it's product or service. Is that accurate?
Yeah, that's 100% right. And as I mentioned, it's, it depends on what you're going out and you have a story to tell. The platform is not going to insist that you have a product, but what the platform is going to want is they're going to want to make sure that you've got something that they think is going to pop. They've got limited real estate on their platform, and they're going to only let companies that are raising capital take a piece of that real estate for a short period of time that they think are going to be successful, because the platform is typically going to get a percentage of the raise, and then it goes into their statistics where they're telling people in a year or 2 years, we've done 50 raises and they've all been oversubscribed. So the platform, both economically and reputationally, wants to have a raise that's successful. And whether you've got a product or a service or something else, it's got to be something that's sexy, that the platform thinks is going to catch the eye of their retail investor. I know Paul said that July was one of the busiest months. I've got my own theory that people were sitting at home in the pandemic. Everybody's surfing the internet,
yeah,
and they're finding their crowdfunding. They have some people that have maybe a little more free time than they otherwise would have in deciding to invest in a crowdfunding.
All right. Thank you, Larry. So I know we have just about 5 minutes. So let me just put out a final question for all of our panelists. For those who are interested in pursuing crowdfunding, what would your advice be for them at this point? Sarah, let me start with you.
Make a plan and that really like be very clear about what are you trying to do and make a tight of a plan about how you're going to reach as many people as possible, because that will serve you well regardless of what you're doing. And now is the time to double down on your reach, on your plans, your financials, put everything you can in order and as tight as you can, and then determine the right platform, the right method. But shore it up, because that's how you're going to get beat in the market, is if every I isn't dotted and every T isn't crossed. Particularly if you're an underestimated founder, we know that everything gets looked at twice as hard, and that hasn't changed yet, unfortunately. So now's the time to make sure that our ideas see the sunlight.
Thanks, Sarah. Kate, what about you?
I would highly recommend seeking out other entrepreneurs who have been both successful and those who have been unsuccessful on crowdfunding, and just get a download from them on their thoughts. And they can be brands that you admire, they can be brands that you have connections with, they can be brands in your hometown, lots of different directions, but reach out and talk to some people who've had experience from your perspective and just ask them to share what they think. And do that with a number of people, because you're going to want to filter out all of those different ideas. But that's going to help you catch things that all of the service providers won't know, because you're going to get it from that real-time experience.
Thanks, Kate. Paul, let me go to you.
Yeah, I would say make sure, come up with this I call them ambassadors. Make sure you have a group of people that are just your people, and they are going to support you, not only financially, but they're going to help you promote this thing out and get it into the most number of eyeballs that are possible. Because if you don't have a group of people around you, I think Kate, or Sarah, one of them talked about the concentric circles. This is very important that you have a dedicated group of people that are really not only financially invested in your product, but financially invested in the team and in the people. And talk to Shulman Rogers. We have an equity crowdfunding package, and we're happy to talk to you about it.
All right, Larry.
Well, Paul stole my answer, which I had the longest time to think about. But really, I would say, pick up the phone and call up me and Paul. Have a cup of coffee with us for a half an hour. There's crowdfunding, but we talked about where I started. Crowdfunding is the latest innovation in many creative ways for startups to raise capital. And talk to a seasoned professional who can put it in context for you and say, what's the best way for you to raise capital? What's your most likely path to achieve your goal? And then, and then I think that comes sort of before or concurrent with some of these others, not mutually exclusive, talking to 5 successful people that have done it before, putting together a plan, writing down your goals. But I think somewhere early in there is talk to a seasoned professional who's seen it all and can talk to you about your alternatives, over a cup of coffee without the meter running.
Thank you, Larry. So I see Seema back, which is my cue that I need to start wrapping it up. So let me just end by thanking our panelists, Larry, Sarah, Kate, and Paul. You guys were amazing. I know 1 hour is a very short time to talking about this particular topic, and especially the fact that we tried to talk about different aspects of crowdfunding, right? So we could probably do 4 more sessions on that. But having said that, I just want everyone to know that this is pretty much the start of the conversation for us. As Kate mentioned, there is much more to come. I want to thank Startup Week for providing us a platform to come together and have this important discussion. And we hope to see a lot more exciting sessions from Startup Week this coming week. So with that, I'm going to turn it over to you, Seema.
Yes, I really want to thank all of you, Larry, Sarah, Kate, Paul, Prayas. You guys did a fantastic job just laying out a lot of the foundations and the regulatory stuff that's coming down the pike. So We've already gotten some feedback back from some folks, and they really enjoyed this conversation. So thank you so much. I did want to have a big shout out because this is a free event, 5 days free event. Okay, every year we do this. We would never be able to do this without our title sponsors and our partners. So I wanted to make sure that I said thank you to Next. This is powered by Shulman and Rogers, Wiz, Technology Rivers, and Insperity. Thank you for your partnership and continued partnership. And for the folks that are watching, we have one more event in 1 minute, and it's called Failure Stories. And it's actually going to be really fun. It's a networking opportunity for founders to share the things that they learned, the things that they weren't successful at. And those are times that we actually can fail forward together and learn together. So we hope you join us there in 1 minute. And we look forward to day 3. I can't even believe it. So thank you all so much, and we'll talk soon. Bye-bye.